Hello, options traders, and welcome to the weekend update here for February 4th, 2024. So I'm recording this on some different software today, and I don't know, I'm experimenting with it. So you guys may not notice any difference at all, but if you do and you got any thoughts or opinions on it, leave me a comment if you would. So let's just go through our trades. Let's see if I can move this. Oh, I guess I have to move that later. So anyhow, we've got on a number of different broken wing butterflies, these three. Then we have this trade on, which is a flat fly with a long call. Then I have this skewed iron condor in SPY. And then, of course, that Google bonus trade that isn't a bonus at this point. But we'll see. There may be some things we can do on that. But the couple things I wanted to point out, specifically on the broken wing butterflies. Earlier in the week, I adjusted this one by rolling the wing up on this side. I kind of left this side alone at that time. But one of the questions I got, and I should also point out that when I say rolling the wing up, the options, I'm actually rolling the options down, but I'm referring to the graphic here, the wing, and I'm rolling that wing up. So I know there was some confusion out there, and I want to clarify that. So anyhow, I rolled the wing up on this, and the question came in, well, why are you doing that during the little bit of pullback that we had? And the reason for that is because that's the time I can do it. That's the time that I can get some additional premium, if you will, to make that happen. Now, to show you what I mean by that, let me come into this specific trade here, and let me get my strikes into focus here. And we can see right now, if I were to roll this upper wing down 10 points, and we take a look at this, you can see I'm picking up virtually nothing. I'm adding quite a bit of downside risk, but I'm picking up virtually nothing here. If I take a look at an order, I'm picking up 15 cents, 15 bucks to make that roll, and I'm going to spend, a buck in commission or whatever on it. So, and right now the bid-ask spreads are a little wider because the market's closed. It's Sunday. We can see that we're looking at, 50 to 20 there. So during normal market hours, it would probably be even less than 15 cents. It might be 10 cents or so that I would pick up. So when I look at that, and I'm looking at potentially improving my upside benefit if the market stays up in this area, I'm improving that by 10 bucks, and I'm taking on $1,500 in additional downside risk to do that. Does not make sense to me, okay? So this particular trade, for example, probably won't do anything with this, may even take this off and just take the very small percent gain that I was able to get out of it because the market just ran, pretty hard, pretty fast here, and we didn't get much of any pullback to adjust this. And we saw this last year as well. The downside was last year I had some call spreads on up here, which were adding some risk into this trade. And I should point out that if I were going to adjust this trade right now, that may be the only thing that I would consider, is maybe I come up and sell a 10-point wide call spread up here that does juice this trade quite a bit, allow me to get, 10, 15%, etc. But do I want that upside risk in here? That's something as a trader I need to stop and consider. So that would put some negative delta into this trade, which might not be a bad thing to have. But let's compare that, or let's look at all of the trades that are open out there and see how that kind of layers in. So here we're slightly positive delta, neutral delta, slightly negative delta, slightly positive delta. So we're kind of, we got a mix in there. So we could do something like that here. Now, this trade that's a little further out in time, this one expires a month later. Let's just look at what happens in the same scenario here. Remember, in scenario one, we were able to pick up about 15 cents. We should, we can see right here that we're definitely getting a little more than that out of this. And if we look at this, we're getting 90 cents. So that's because this is much further out in time. So two things will help us get an effective, what I'm calling a roll up. Those are being further out in time, gives us more premium when we make that move, or an increase in volatility. If the market were to start to pull back a little bit and some of these spreads become more valuable, it becomes a better trade at that point to make those adjustments then. So that's why I look to do those sorts of things when we have the chance to do them. Now, what I'm looking for is a pullback, but not a pullback that I'm so scared that we're going to end up down in here somewhere. So I'm just looking for a normal, routine, run-of-the-mill, pullback. That's kind of what I'm after. So this one I will probably look to adjust this week. Again, raising this wing. I'll make a decision as to whether or not I want to remove risk on this side at the same time or keep my risk the same. Because as you saw, if I just simply roll that right wing, of course, anytime we do that, it does add some downside risk. That downside risk is quite a ways away. I mean, that's 500 points, or excuse me, 300 points away, 350. Am I really concerned about it? Probably not too much at this point. So that's kind of the game plan for the different trades that are on right now. With this one, it'll be kind of the same thing. I'm going to look to strip out another one butterfly when I can get a good price for it. This one, I'll float an order out there to just thin out one of these condors when the opportunity presents itself. With Google, if Google were to start to move back up, and I don't know if it can move up enough at this point to really impact this trade, but if Google were to start to move back up, I have the long call in place here, but if we were to start to move up, I would probably look to sell a short call against it, turning this into a spread. But I need to have some upward movement before I can get any value out of an option in this area. I don't want to sell, for example, 143 or 144, because that gives me $1,500 in upside risk if the market were to rip up per contract. So that's why that one probably isn't the path that I want to go down. So let's now take a look at the market itself and see what the market is looking like. So I'm looking here at SPY as opposed to SPX. I think you guys know I like to look at SPY because if I look at SPY, I can see volume here. They don't show volume on SPX because, of course, it's contracts. It can be traded at all different price points. But SPY being an ETF, we can get some volume in here on that ETF. So we can see that we broke to a new high here. And we did pull back a little bit going into the close. That's not abnormal on a Friday. Had this happened on a Monday, Tuesday, Wednesday, I would have expected that we probably would have closed out at the high of the days, which would have been a little more bullish. But still bullish. We broke out to a new high. We pulled back. We stayed above that old high, which was like the 491 here in the SPY. And again, SPX is going to look very similar. We look at our volatility down here. The implied volatility has dropped. It's getting lower again, which means that there's not a great deal of fear in the market at this point. As far as expectations, I mean, I told you I was expecting a pullback maybe to the 480 range, maybe not quite all that way. I was expecting a rebound to 490, probably a little chop sideways, and then I was expecting a breakout. Well, we didn't really get a day or two of sideways chop. It just went in full bull mode and just kind of blew right on through that. Again, this is one of the reasons why, if we come back and look at our positions, I've been reluctant to do exactly this, put on a call spread to the upside. That, quite frankly, worries me right now because the market just really isn't, it isn't adhering to any upside resistance. Right here at this old high, it did come up, back off that. I would have expected it to come up, chop sideways a little bit. It didn't, just blew right through. Same thing here, came up, made an all-new high. I would have expected the pullback, come back up to that high, maybe chop sideways a little bit. It didn't. It just blew right through, and it blew right through with some decent volume associated with it. So we're in definite bullish mode right now. Earnings reports so far have, for the most part, been pretty good. Facebook or Meta the other day was just like crazy nuts as to how well that did. And if you did not see that, fortunately, I have some Meta stock. I'm not a big fan of Facebook, but I am a fan of their stock. And I mean, that's just crazy. I mean, that's an 80-point gap in a $400 stock. I mean, that's a 20% jump overnight. And look at the buying volume that came in on that. So this is one that, if it pulls back a little bit into this 440 or so, I may have to add to my position there. So anyhow, that kind of wraps us up for the weekend update. And again, if anybody has any thoughts or comments on this different format, the different software, if it made any difference in viewing on your end, let me know. Always interested in comments. I am not an expert in this new software yet. I'm trying to do some different things that I think will make it more appealing for the viewers in the not too distant future. And as I learn and create new skills in that area, hopefully you'll see some better production quality. But right now, at least it got the point across. That's it. Have a great rest of your weekend, everyone.